Right, to finish this section off, I'm going to show you how to identify a range in market. So in the last couple of videos, we've identified that in an upwards trend, you'd have your higher highs and your higher lows, and you would continue drawing a line across the bottom or through wherever price fits best, and exactly the opposite in a downtrend. So you're getting your lower lows and your lower highs, and then the market sort of going in sort of a downwards transition. So a ranging market. So what this actually is, this is a market where the price is going absolutely sideways. There's no price cyclicity at all. So the highs and the lows could be all over the place. There's not actually any form. The way I try and explain trending markets is a trending market is a very, very calm state. So the market is quite predictable. You can almost guess where the next bounce off of a trend line is going to happen, where a ranging market is very, very unpredictable. So it can literally turn around on you at any moment. And so in the next section, I'm actually going to show you how to actually trade a ranging sideways market. But before we can actually trade a ranging market, we need to be able to identify what one actually is. So in this case, this market looks like it's going completely sideways. So we haven't got any higher highs or lower lows. If we look at the swings, the lows aren't getting any higher and the highs aren't really getting any higher. So the price ain't going lower, it's not going higher, it's just going in a complete sideways momentum. So this is what I would call a ranging period. So we're not actually making we can't really draw a trend line because the market is not getting any lower. And here, it's not really getting any higher. So you can see that it's all going all over the place, but the market overall is completely going sideways. And that is just a quick way to identify what a ranging market actually is. It's just a market that's going sideways and is not trending.